What is going on, YouTube? It is your boy, Low Daddy, Low Rider, Low Stradamus, the first there ever has been, the last there ever will be, so I guess that makes me the one and only. And whether you like me or you don't like me, you cannot get rid of me, because Ideanomics just had their Q1 2021 earnings report, and sorry for the confusion on the last video. This is actually the video that people commented on and said that my jaw would drop in the next earnings. So I want to dive into that right away. Going to get through two last things really quick, and then we're going to move forward. Last two things, as always, this is your friendly disclaimer that I am not a financial advisor. I am an online marketer, so I am not legally qualified or allowed to give you financial advice. Please do your own research when you make your own investments. And then last thing before we move forward and dive into this balance sheet and this income statement, please remember, if you appreciate the time I'm taking to do this for you, again, it's another 11 o'clock, 12 o'clock night here at the office. Remember to smash that like button, smash the subscribe button, and ring the little bell next to it so that you get notified every single time we drop a new video and every time we go live. And we're making money up in here, which is every single day the stock market's open, folks, except for some days. Now let's dive into it. Alright, so the new format in the last video that I uploaded actually was pretty well received, so we're going to roll with that again. As always, you can find everything we're about to go over on my website at growsaloon.com/growth-resources. Make a free account. It takes 2 seconds. I'm not going to spam your email, and yeah, you know the spiel. Now let's dive into their balance sheet. So you can see we've got December 31st, 2020 over here, and then on the left we've got March 31st, 2021, so Q1, that's that reporting period. And then at the top, what do we always check for? What is this measured in? This is going to be in US dollars in thousands, so we'll add 3 zeros to the end of all these numbers. That's going to give us our real figures there. So you can see between the end of 2020 and Q1 2021, our total assets increased by roughly $335.5 million. Our total liabilities, as we come down here, have also increased, which we'd expect. We knew we were going to add spending as we grow and scale. Our total liabilities increased by roughly $107.7 million, and then our total stockholder equity increased by roughly $228.3 million, which you can see down here. We do have non-controlling interest, so we're just taking this number right here, and that will perfectly balance the balance sheet for us. Now let's go ahead and dive into the income statement. Alright, so the income statement you can see is also measured in USD in thousands, so we'll add 3 zeros to the end of all of these figures as well, folks. You can see our total revenue is the third line over here, and that increased from $378,000 in Q1 of 2020, which is this right column over here, and then in Q1 of 2021, that went from $378,000 to $32.7 million for a difference of $32.3 million. So that's actually a really good quarter for us. My jaw is getting ready to fall off my face. Aside from that, you can go ahead and you can see, what our gross profit was after we take out our costs for acquiring that revenue, and then after you rule out our operating expenses as well, we are left with a net loss of only $737,000. So not bad considering we had way less revenue in Q1 2020 and we lost $12.6 million, or so we think. And stay tuned so I can tell you why that's not actually the case here, unfortunately. Before I get into the bad news, let's go ahead and just finish this up like usual. Let's continue with the good news. Our profit margin increased by over 3,300%, which is great. We went from negative 3,338% to negative 2.25%. So still not profitable, but way better than we did this time last year, as I'm sure you expected from those figures we just went over. Let's dive into the ratios really quick, like we always do. You can see this is a new iteration. This is V4 of the Den of Due Diligence. We have segmented the notes section into balance sheet notes, income statement notes, ratio notes, and then just additional notes so that it's a little bit easier for y'all to decipher. Just summarizing everything up here. You can see our typical ratios. These are the last ones we'll finish up with as always. Let's start with our debt to asset ratio, which we already know is just our total liabilities divided by our total assets. That comes out to 0.25. So that's typically seen as a safer investment, anything under 0.5. Our current ratio, which is our current assets right here, divided by our current liabilities right under there. is 3.24. So anything under one or over 1.2 is typically seen as healthy liquidity. But the smaller the balance sheet is, the higher you want to see that number. Berkshire Hathaway has $600 billion of assets on their balance sheets. They can be as close to 1.2 as possible. No issues there, but if a company has under $1 billion, you're probably going to see, 7, 8, 9, maybe even 10, even higher. The higher, the better. That gives us the opportunity to cease opportunity with our liquid capital, which is a good thing, obviously. So there's those two ratios, and then we've got my favorite one, the book value per share. That's 99 cents now. At the end of 2020, that was only 44 cents. So we're heading in the right direction there as well. Our price to book ratio, anything under 1 is considered to be undervalued. Anything below 3 is typically seen as maybe not being fully priced or overvalued just yet. They're at 2.86. That's another improvement. So honestly, this is a great report for Ideanomics. I don't say that very often, as you guys know. Your world's favorite pessimist right here. Yeah, pretty good report. Now we can dive into why the numbers aren't as glamorous as they look, unfortunately. All right, so we're back on the income statement to start. This is exactly what we just looked at a second ago. You can see we've still got that net loss of $737,000. Looks great compared to last year, but look at what happened this year that we didn't receive last year. We got a $12.9 million income tax benefit right here. So our actual net loss from operations would be negative 13.6, negative $13.7 million, which we lost more money, but our profit margin is still way better than it was last year. So it's not as good as it looked, but it is better than it looked at the end of 2020. So still a good report. And then the last bit of bad news I have is that we know that, according to our balance sheet, we increased our assets in Q1 by $335.5 million, which is great, no matter, how you chop it up. But when you go to the cash flow statement, which we don't go over that often, you're going to want to look at the net cash provided by financing activities. So you'll see here that we raised $220 million from the issuance of convertible notes, and then we raised another $53.7 million from the issuance of common stocks, and then from people exercising on their warrants. So roughly $273.7 million of that $335.5 million came from issuing more stock in the company, diluting our share pool, and then issuing convertible notes, which is to, essentially debt for the company unless those people decide to issue or turn in those convertible notes later on, and then that dilutes our share pool even further. So not as great as we thought it was, but we still did add $335.5 million to the balance sheet. No matter how you chop it up, that money exists. So I think this was a great report for Ideanomics. So that's it. Relatively quick video for Ideanomics Q1 2020 earnings report, but can't be upset with it. This was actually a great earnings report for a company at the end of 2020. I didn't want to touch with a 10-foot pole. I wouldn't let my friends touch with a 10-foot pole. That kind of company. So really good earnings report. My jaw still attached to my face. Not that good, but things are looking up. If you're an investor in Ideanomics, you have a lot to be, hopeful for. The numbers look way better than they did 3 months ago. So I'm excited to see how the numbers look in Q2 when you don't have all of this financing activity happening, and we can kind of get our idea of what they're going to look like without that involved. How are the assets going to increase? If they're still losing money, they're not going to increase. That's just how the game works. But otherwise, congratulations to y'all. Y'all did prove me wrong. The company is not as bad as I thought they were 3 months ago. So let's just keep paying attention to this. Remind me in Q2 when they have their earnings report, and I'll drop another video for us. And as always, if you enjoyed this video, let me know in the comment section below. If you don't agree with me, if you think I'm a prick, if you think I'm a jackass, let me know that in the comment section below. I love mean comments, and I'm not getting enough lately, so please help a guy out here. If you want me to do another company for you, let me know in the comment section below. Other than that, please just remember, if you appreciate the hard work I put into this for y'all, like I said, it's 2 or 3 straight nights in a row here at the office at 11:30 now Central Standard Time. Please remember to just smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every time we go live, every time we drop new videos, and we're making money up in here, which is every single day the stock market's open, folks, except for some days. Other than that, whatever time you're watching this at, whether it's day, whether it's night, have a good day, have a good night, have a good time in general, and then go ahead and just spread some peace and love out there. Like I said, the world could really use it right now. Other than that, I will see you all next time. Good night.